the sales of inventory under different inventory systems. I know it's kind of a question always give students a hard time, so I thought maybe let me just try to analyze. Maybe someone can learn out of this. So let's quickly get into it. As you can see here, we have transaction number one. We have the cash sales. This makes the difference. Remember, we can only say cash sales when we are selling inventory. Okay, so it means when we see the word cash sales, automatically it means we sold inventory. So you must just make sure that you remember that, because next time they will say you are selling equipment, it won't be an inventory. Just know that it's the sales of inventory. This is very much important. So make sure that you always check that. Okay, so it means immediately when you are under perpetual, because the first thing that I'm going to show you is going to be perpetual. So if you see yourself selling inventory, it doesn't matter whether you sold for cash or credit, just know that you must expect to have what? 4 accounts. Okay, so firstly, those 4 accounts, at the time when we record, you will see that we are going to have A and B. But for now, for us to those accounts, we are going to say, because we have got cash, we sold for cash, it means one account is going to be bank. Okay, one account is going to be bank. That's the first account that we are going to have. And immediately you must know that bank will always be classified as your asset. Okay, and obviously when you sell for cash, you will increase those assets. So this is very much important. Okay, you will increase what? The assets. Okay, and the second thing is sales. So the word sales, again, because you are selling inventory, you are going to have sales. And then again, we must say sales are incomes. You must learn those things. And at the same time, incomes are increasing. So it is important for you to be able to analyze and know the account. So the first step will be this one. Okay, this is the first part, and then I'm going to show you the second part. So the first part is for the selling price. This is the selling price. This is the selling price. Okay, this is the selling price. So it's very much important. So firstly, you must deal with the selling price, and thereafter you will deal with the cost price. Okay, so again, you need to go and check. So the account will be bank because of cash, and we've got sales because we sold inventory. Remember, even if they cannot say cash sales in future, they say you sold merchandise, you sold inventory, you sold goods. It means you sold inventory. The minute you sell inventory under perpetual, make sure that you have got first accounts, which I'm going to call them, let's say I'm going to call them A, and then you're going to have the second account, of which I'm going to show you. So the A part, you will always have a bank if you sold for cash and sales. But if you sold on credit, this will be credit sales here. So it means you are going to have debtors control here instead. So you need to check that. So this is the first thing that you must do. Secondly, you must know that under perpetual, remember, perpetual means for every sale of inventory that you make, you need to show the cost of sales. So the B part will always be the cost of sales. Okay, the cost of sales, meaning it represents the cost that you make. Can you see now? That's why you even given here the cost. Can you see 35% on cost? Unfortunately, here they did not give us the cost. It means we need to calculate that cost. So what are we going to do? Because of the we are dealing with perpetual cost of sales, in other words, the cost of goods which we sold. So the other account will be the trading inventory. Remember, or inventory, or the trading stock. And we call it trading stock. So it means the cost of sales will always go with the trading stock. Okay. So it means again you need to come here and analyze what are them. So this is an expense, okay, and then the expenses are increasing because the more sales you have, the more cost of sales you will have. Can you see now? And then this one is going to be assets. Remember, you are selling an asset, it means the asset is going down. So can you see now? So you need to practice and make sure that you know how to do it. So it means you must make sure that you always have 4 accounts because you are using perpetual. Can you see now? Even if they didn't give you the cost of sales, just know that under perpetual, like it or not, you will always have what? The 4 accounts, and cost of sales will always be there. So immediately after doing that, we need to come here and check the rules because the rules are very much important. Can you see I gave you the rules here? So it means because we said bank is an asset and the asset is increasing. So I use this technique where I box or these accounts or these groups of accounts. So I to check, okay, bank is an asset. So I found the asset in this box. So I said the asset is increasing. It means I will check the arrow that goes up, meaning the asset will increase on the debit side. Can you see now? So it means I will come and put a debit just as a control. Can you see now? I'm just going to come here and put a debit so that I can be able to remind myself by the time when I record. So I'm just going to write GR. Can you see now? So meaning this GR, it means I'm going to record this on the debit side. Can you see now? The same applies to income. I'll say, okay, incomes, I'm going to go and check the incomes. And I said, okay, the incomes are here. And as you can see, the incomes are increasing. It means the incomes go up on the credit side. So I'm going to come here and put, can you see now? I'm going to put CR. Can you see now? How easy is that? So I'm going to come here and put CR just to make sure that, I've got control. So at least, can you see now? I know the size. Can you see now? So now I can just come here for the A part. I can just call this number 1, 1A, 1A, and then under 1A, do this. We are going to have one account as, remember we said we, so I'm going to come and debit bank. Okay, I'm going to come and debit bank. Can you see now? So for the general, guys, general is going to be what you call the CRJ. But remember the generals, we can still talk about the after, but for now don't worry about the generals. And then obviously the other account that is going to be debited is bank. I'm going to say bank as bank like that, and then obviously I must create the other account where we said they are sales. Okay, so I must come here and then input sales. Okay, the other account is going to be sales, so it is important for us to do that. Okay, so in other words, the 2 accounts, as you can see, debit and credit. And thereafter we're going to check, okay, we said we have got an asset here. As you can see, bank is an asset, meaning I'm going to record something under assets. Sales is an income. Remember, the incomes will always affect owner's equity. Remember, the owner's equity is affected by the following. Let me write them down here. Capital, owner's equity. Let me just write equity because of space. So it means you only come to this when you see these things. Okay, and then we've got what? Expenses. Okay, so these are the only things that will make you to come to the owner's equity. So the expenses will affect owner's equity negatively when they increase, and then the incomes, when they increase, they will affect owner's equity positively. Here I was supposed to write drawings, not equity, because drawings, sorry, I made a mistake, so I'm supposed to write drawings. So drawings will affect it negatively, and then the capital will always affect it positively. So you must just check which ones have got the positive impact and which ones have got the negative impact. Okay, so I think you can use this technique. You only come and affect owner's equity if you see these things. If you don't see them, don't come to the owner's equity. But now I'm seeing an income, it means income is here, I'll come to the owner's equity. So it means I won't come to what? I won't come to the liability, I'll just put 0 so that I cannot make a mistake. Can you see now? Now we say assets are increasing. It means we must just go to the assets and we increase them by how much? We increase them by 8,000. Okay, and then this is what we want to use now. We increased because the amount is 8,000 here, so we said the asset is increasing. Now we know that this is an income. We don't have a column for income here, but we know that incomes always affect what? Owner's equity. And again, you can just say, I know that when the incomes increase, the owner's equity will also increase. So you just have to come here and put how much? And put plus 8,000. Can you see how easy is that? So it means this is how you were supposed to record it. Can you see now? So yes, it can be a challenging thing, but you can still understand this if you put mind to it. Okay. Or again, if you struggle with the sign, especially because most students struggle with the signs and the ownership, what you need to do, as long as you record the assets, because assets are easy to understand. As you can see here, bank is an asset. So assets increase on the debit side. It's easy to understand the assets. I advise you to always start with the assets, because if you have to come to the assets, it means whatever you wrote under the assets will always go to the next column. Can you see now? Plus, plus. You will never have plus and minus. Even if, let's say, for example, you were supposed to affect liability, it will still be plus. You will never find plus and minus. So always start with the assets. Whatever you have under assets, you just copy and paste. If you've got a minus here, you must have minus here. If you've got a minus here, you must have minus here. So what I'm trying to say is, as long as you affect assets and one of the two, the signs will always be the same. Okay? Now, let's check the B part. So the B part here, unfortunately, okay, we just have to put the accounts first. I'm going to put them as what? As B. Okay? As B. And then, obviously, it will also go to CRJ. So the account, don't worry about the journals. The journals, we still have to talk about them. And then the account debited. Remember, we're on the B. We said the account debited, we need to decide. Remember, we didn't decide here. So we must check, go back and check the rules. So if you can check here, we have got cost of sales here. Cost of sales is an expense, and the expenses are increasing. So we go to the box where we see expenses and check the arrow that goes up. So meaning they increase on the debit side. Can you see how easy is that? So I'm going to just come here and put what? A debit next to what? To expenses, because we know expenses increase on the debit side. Can you see now? The expenses increase on the debit side. So that's why I need to come here and just put the debit here. Can you see now? Obviously, I know that if you've got the debit, the other account will always be the credit. But I just want you to know how to use the rules. The other account is called trading stock, and the trading stock is an asset, and we said the asset is decreasing. So we go to the box where we see an asset. As you can see, there's an asset here. We said the asset is decreasing. So we check the arrow that goes down. So we go and check in that box, arrow goes down on the credit side. So it means I'm going to record on the credit side. So I'm going to come here and write the credit side. Okay. So very, very easy. You must just know how to use the rules. Okay. So and thereafter, you just have to put it there. So it means now the account debited, as you can see, the account debited will be cost of sales, and the account credited will be what? Will be the trading stock. So I'm going to come here and put cost of sales. Do you see now? And then the account credited, like we said, is going to be trading stock. And then I'm just going to come here and then put what? Trading stock. Can you see now? Easy, easy. So that's the first thing that I do. Okay, now remember I said I advise you to always start with the assets, because the asset will always give me the answer for the other columns. So let's start with an asset just to avoid confusion. So the asset that I'm going to talk about is the trading stock. And we said the trading stock is decreasing. Obviously, a trading stock is an asset. This means I must go to the asset. That's the first thing that I must ask myself. I will go to the assets, and this one is an expense. So expense will affect which column? As you can see here, expense is one of these accounts here. So expense will also affect what? Owner's equity. It means I'm going to come to an asset here, and I'm going to come to the owner's equity because of expense. So I'm just going to put 0 again to be safe, so that I cannot make a mistake. Can you see now? I'm going to put 0 here, so I don't want to make a mistake of coming here. I know that I must not, because I can only come to this column if I see a liability. If I see liability here, so I don't see any liability. So I will only affect owner's equity because of expenses, as you can see, and I can only affect trading stock because of an asset there. So we said the trading stock is decreasing. It means we must go there under assets and decrease. But we don't know how much. Okay. So that's why they gave us this information. Can you see now? Markup. So markup on cost. This makes the difference. This makes the difference. So you must always check on cost. So if they say on cost, we always talk about the markups at a later stage. So you must always make sure that you analyze. So you analyze like this. I'm going to show you. So this is what you must analyze if you're still a beginner. To analyze the cost, you just have to come here. I'm just going to write it down for you here. Can you see now? So if they say the markup is on cost, it means cost is 100 all the time. Markup is on cost. You put 100 in line of 100, and you put the markup at the bottom, which is 35. Now you say cost plus markup, you get what? You get the selling price. So this is the formula. Okay. So the minute they say on cost, automatically don't question anything. Just go and put 100, take the markup and put it there, add the cost plus the markup, and you get the selling price. But at the moment, you must ask yourself, what are you trying to calculate? You are trying to calculate the cost. You just come here and put a question mark because you are calculating the cost price. Can you see now? You are calculating the cost price. So now, what is the next step? The next step, it means you need to check. For you to calculate the cost price, which amount do we know? So if you can check from the question, they gave us what? They gave us, let me do this. I just want to arrange this nicely. They gave us the selling price. So let me do this so that it can be nice. I'm just aligning this so that you can see it nicely. This is how you must do it so that you can see the order. Okay, I want you to see the order. I want you to pass with distinction. I don't want you to fail with distinction. You know what I mean? Yeah. So this is how it is. And then so now you go to, they gave us what? They gave us the selling price, which is how much? Which is 8,000. That's how I analyze as a beginner. You don't have to do it. There are other methods. So this is what you need to do. So just put question mark because they're asking you for what? For the cost, and then put the amount. The amount that they gave us is 8,000 is the selling price. So I will put the amount in line with what? The selling price. And thereafter, for me to calculate, I'm just going to take the percentage of the in line with the cost, and I will divide it by the percentage in line with what? With the 8,000. So what I'm going to do when I calculate cost, I'm just going to say 100 because the question mark is in line with cost, and I'll divide by 135. Can you see? That's how we calculate, and we times by 8,000. So remember, we still have to have a topic on that, but it will always be like that. But if you like the formulas, no problem. You can just calculate those formulas. Okay. But for me, I don't like. I just want to come up with my own formula. So when I calculate, I get something like this, and then I'm just gonna maybe I don't want cents. I'm just gonna convert and say 5926. I think you understand how to convert. I'm gonna say 6 instead of decimals, but the question will always tell you what to do. So this is the cost price that, or the cost that I had to calculate, or the cost price. Yes. Okay, now this is how you need to calculate. Okay, this is how you have to calculate. Okay, so this is the cost price. Okay, so practice makes perfect. So you'll never go wrong, but remember we still have to talk about the markup. But I'm just saying this is how to calculate the cost price. Okay, so now it means I know my cost is 5926. So but now I'm just going to record. I'm going to go back and say, okay, I've got, remember I said let's start with the assets. So under assets I'm going to minus, because we said the assets are decreasing, but minus how much? I'm going to minus that amount that you see on top, 5926. So I'm going to minus 5926. Can you see now? I'm going to minus 5926, and then the same amount, 5926. Can you see now? This is the what I add to minus, because we said assets are decreasing. Can you see now? And then thereafter, we must go and record. Remember, expense. We said the expense affect owner's equity, and we know that, can you see, the expense affect owner's equity negatively. So I'll go and check and say, okay, I'm gonna go and record under owner's equity, but I'm gonna have again a negative. You see now, I'm gonna have a negative 5926. So this is very much important. Remember, if you struggle with this one, start with what? The asset. So the minute you say minus 5926, you copy and paste. They will always be the same, the signs. So I know this column can be confusing, but just know that expenses have got a negative impact when they increase. Can you see now? So this is how you are supposed to record it. The question is, what if it was under periodic? Under periodic, honestly speaking, you were supposed to just record this. So if it was under periodic, you only record the A part. So you don't have to worry about the cost of sales. So under periodic, I'm gonna go down, you see, analyze anything. I'm just gonna go and say, okay, I'm just gonna have the only one part, that part A. I'm just gonna say one, and then I'm just gonna just write A there like that, and then everything will remain the same. And then I'm just gonna write CRJ or CBR. It doesn't matter how you call it. Can you see? And then I'm just gonna write, remember, the bank, and the other one is gonna be the sales, and then the other one is gonna be here. I'm gonna have plus 8,000, and the other one I'm gonna have 8 plus 8,000. Can you see now? So the difference between the two systems is just the cost of sales can only be calculated at the end of the period. That's how we don't show the B part. We don't show the cost of sales part. Okay. We don't show what? We don't show this part because remember, cost of sales and periodic, the word periodic, it means we are going to calculate the cost of sales at the end of the period. At the moment when we record these transactions, we are not yet at the end of the period. We are just during the period. So we can't calculate cost of sales. But when it comes to perpetual, it says you need to record the cost of sales the minute you see sales. That's why we have got sales and cost of sales at the same time. So the systems are different, but we still have to have a topic whereby we differentiate between these systems. So this is how you are supposed to approach the question, and hopefully it makes sense. And then I hope you will understand better in future. Thank you very much, and have a